Peter Sorrentino. He's a senior portfolio manager at Huntington Asset Advisors. They've got about $15 billion in assets. They own more than 1 million shares of Walmart. He joins us on the phone from Columbus, Ohio. So, Peter, what do you make of the earnings report?
Well, actually, I'm rather encouraged. These numbers are a little bit better than what I had for the fourth quarter. So, from that perspective, I was afraid that we'd seen the consumer pulling in their horns a little bit more. The numbers, I think, going into next year are a little cautious. I think maybe in this case they're playing it safe and probably hopefully going to underpromise and overdeliver. But I think there was good progress here, and I think the sales numbers again are a little better than I had hoped. But I saw more flow through to the bottom line, which is a good indication because there's an awful lot going on at Walmart with regard to store changes, format changes, bringing on lower margin products to drive traffic. And yet it doesn't seem to have too adversely impacted the margins at this point. So I am encouraged that the momentum at the stores continues to go on. So
their strategy of cutting a lot more products, I think, back around the holiday season and so on, this is turning out to be a good one, at least from what you're seeing.
Yes, I think the groceries, the prescription, the electronics, moving Dell Dell products into the stores is bringing in the foot traffic, and I think we're getting a benefit from a sort of a downward shift on the part of consumers. And this is a great way for a consumer if you're trying to maximize one trip and get the most out of your gasoline dollars.
Right.
Hit Walmart and you can knock off a lot more shopping than you have historically.
A big chunk of their sales Walmart sales comes from groceries. They're benefiting also, you think, in that regard?
I think they are benefiting from grocery. I know they're definitely getting better the benefit of traffic on that. The low margin product, hopefully what it's doing is driving ancillary sales in other areas. Nobody gets rich selling groceries, unfortunately, but I do think it's a great way to drive traffic here.
Now, when we talk about Walmart, we like to talk about Target, a much smaller competitor, but nonetheless we compare the two. I mean, how do you think Walmart's doing in terms of competing against Target at this point?
At this juncture, I think it's really more a question of the consumer, I think, altering their shopping preference. I think Target's hitting on all cylinders, and you really can't punch a hole in the Target story. They've got a little more growth to go. They don't have quite the number of locations Walmart has, so they can do more store openings, get more in top-line growth that way. But in this economic environment, if the consumer is shifting down in terms of the way they're spending their dollars, it plays right into Walmart's strong suit at this point. So Walmart may benefit for some time here simply from a conservative consumer going forward.
Hey, Peter, it's Julie again. If you do see the Walmart shares pull back today, we don't really have an indication of how they may trade yet, but if there is some disappointment with the forecast, is this a position you would be adding to today?
Definitely. It's difficult to get, in this point, a consumer story that's got, I think, a lot of solid footing underneath it. Because we really don't know where the consumer is going. We're probably going to see housing weak for a couple more years here, even once new sales or new starts bottoms out. So, from that perspective, the consumer mindset is going to be negative for some time to come, and that really plays into Walmart's strength. So, on weakness today, where I'm underweight in the consumer in a portfolio, this is definitely a name I have to look at adding to the portfolio.
All right. Anything you'd want to ask them on the conference call today? I know you've just initially heard some of their earnings, but what would be the one question you'd want to ask them?
I really want to get a feel for how they're doing on international because, again, this is I think this is their whole card. If they can get international ramped up, this can deliver for them the kind of growth that they may not see in the North American market. So international and how effectively they're putting those dollars to work is going to be, I think, critical going forward. Also want to make sure that the momentum at Sam's Club is still there.
All right. Okay, and we should point out, I think last year they had about $271 billion in sales here in the U.S. International was about $77 billion, but the growth is about double overseas in terms of in comparison with the U.S. Peter, we're going to leave it there. Thank